This is part 2 of January 16 recording. We are going to continue on, and now I'll start some new stuff that I haven't gone over in class yet. So we've analyzed all the transactions. Then we will add up each of these columns. So real quick, cash will total $32,000. Land 12 on 12 is $24,000. Notes payable will be $10,000. Common stock 6 and 30 is $36,000, and retained earnings 8 plus 20 minus all of those is $10,000. So reviewing real quick, 32,000, 24,000, 10,000, 36,000, and 10. And we also want to check that our assets, those total 56,000. And then the other side of the equation, if I add those three up, I also get 56,000. So the left-hand side of the equation equals the right-hand side. Okay, the next step is part B. We're going to write out the financial statements, and we're going to use this. So let's review. Here's a page out of your textbook, the financial statements, starting with the income statement. Again, revenue minus expenses equal net income. So let's go back and look at our problem. Revenue is here under retained earnings. We have revenue and we have two expense accounts. So I think okay, so here's our income statement. And so let's start writing it out. This was for the year 2. So we're going to say for year ended. And it was their year end is December 31st. And I'll just put year 2. Could have been 2022, whatever it is. So for year ended. And we're going to start with revenue. So we're going to write our service revenue. And then we had two expenses, utilities expense and then operating expense. So writing those out. And let's go pick up those numbers. All right, service revenue is 20,000, utility expense is 1, and operating expense is 15. So I'm going to put those in, put a dollar sign in front of it, so 20,000. Utilities expense is 1, so we're going to subtract the 1. And then operating expense, subtract the 15. A lot of times I don't really put the expenses in as negatives, but I believe you will when you work this out. Okay, so the bottom line, revenue minus expenses, that's net income. So we have $4,000. Okay, then the next one is a statement of changes in retained earnings. That also covers a period of time. So we're also going to write for year ended December. Okay, so I just paused for a moment and I went ahead and wrote out for year ended December 31st, year 2. Apologize for the messiness. Recall there's two sources of retained earnings, common stock, so beginning common stock, if you want to take a moment to write that out, and also retained earnings, beginning retained earnings. So you may want to pause and write that out real quick. Okay, common stock goes up when we issue stock. So let me back up a little bit. We probably want to put plus. So we're going to add plus common stock issued. I am going to abbreviate that because I don't have enough space to write out the word common stock. So plus common stock issued. And let's go back and get those numbers. All right, beginning common stock was 6. We issued $30,000 and we're going to end up with a balance of $36,000. And we just put that on our financial statements. So dollar sign, start with 6,000. We issued 30. I'm going to add those together and get my total $36,000. So I'm going to have ending common stock, and I'm going to just shortcut it and abbreviate CS for common stock. And we're finished with our common stock. Retained earnings, recall it goes up for net income, so we're going to put plus net income. and it goes down when we have dividends. Less dividends. So you're going to need to memorize the format of these financial statements so that you can write them out. You'll easily be able to read them when you finish the course and go out in the real world. Okay, so beginning retained earnings, net income, and dividends. Let's go back up and pick up some of those numbers. Beginning retained earnings is 8. The revenue expense are already on the income statement, but we do need this $2,000 of dividends. So the 8 and the 2. And let's take that forward. So we started with 8. We had dividends of 2. All right, so beginning retained earnings is $8,000. We need to add in net income. I'm going to pull that from the income statement. Put it in, that's $4,000. So 8 plus 4 less dividends, and that will give us our ending retained earnings, and I'm going to abbreviate it RE. You won't be able to do that when you do this in Connect. You'll have to write it out or do the drag down menu. 8 plus 4 minus 2 is an ending balance of $10,000. So now we have our two ending balances, 36 and 10. I'm going to add those to get total stockholders' equity. So total stockholders' equity, 36 and 10, is $46,000. Okay, so we have finished 2. The next one is going to be the balance sheet. Recall these two ending numbers are going to go forward to the balance sheet when we do stockholders' equity on the balance sheet. Okay, let's review. I want to go back and review the financials. So here's an example out of your book. So we did net income, then we did stockholders' equity where we had common stock, and then we had retained earnings. Notice net income was pulled into retained earnings. So we had beginning plus net income minus dividends to get ending, and then they added these two to get ending stockholders' equity. Okay, and then these two, notice they did it on the left-hand side, are going to go into the balance sheet for stockholders' equity. We'll see the common stock of 120 and then that 31, except we'll be using our own numbers. Okay, the balance sheet is at a point in time, so it's going to be as of, I prefer to say at, but your author does as of December 31st, year 2. So it's at a point in time, so as of December 31st, year 2. Okay, and then we're going to list assets. We'll go here. We'll have our liabilities here. And then underneath liabilities, we'll have stockholders' equity. Those are the three big things on the balance sheet: assets, liabilities, and stockholders' equity. Okay, we need to go back and see what assets the company had in our particular problem. They have 2, cash and land, 32,000, 24,000. Let's go put those on our balance sheet. So cash really means cash in the bank, not actually paper cash. So cash in the bank of 32,000. Land had a balance of 24. And I'm going to add those up, take it over to the right, 56,000. And I'll have total assets of 56,000. So we have our assets. Now let's do our liabilities. As I recall, we only had the notes payable. Squeeze that in, notes payable. Let's go back and look for the dollar amount of notes payable. Notes payable is $10,000. see, I'm going to get this. And for some reason, they are actually doing total liabilities. I think I'm off a little bit, but this is going to be 10,000 as well. I probably need that line here instead of there. So 10,000 added up, I get 10,000. And then stockholders' equity, we have the two, the common stock account, and the retained earnings. So the two common stockholders' equity are common stock and retained earnings, and I'm pulling those. 36,000 will go forward from stockholders' equity and 10,000. So 36,000, 10,000, and again, I'm off on this particular chart. Total, and I'm going to abbreviate stockholders' equity SE. Those two total 46,000. I'm off a row, you can tell, but that's okay. All right, the last thing is to add up what's normally the right-hand side of the equation, right? Assets equal liabilities plus stockholders' equity. We've already totaled assets to be 56,000. Let's total the other side, liabilities and stockholders' equity. And if I total those, I'll get 56,000. So then write out total liabilities, I'm just going to call it an S, and stockholders' equity, you'll have to write those words out when you do this actually in Connect. Total liabilities and stockholders' equity.